Hello everyone and welcome to another options trading educational video from OptionsPath. Today we're going to talk very briefly about one of the most important elements of trading options, time decay. This is a major aspect of options trading that helps to distinguish it from trading directly in the underlying stock or ETF. Whether you're buying calls or puts, or selling them, time decay will play a huge role in how you should choose and structure your options trades. Now, one thing that will likely never change is the unstoppable march of time. And one of the major weapons in the options trader's arsenal is the phenomenon of options time decay, otherwise known in Greek terminology as theta. Theta measures the rate at which an options contract loses its time value as the contract's expiration date draws ever closer. As one might suspect, options time decay generally works to the benefit of those selling or shorting options, while generally working against those buying or long options. Although we often employ both options buying and selling strategies, most of our bread and butter income trading involves the use of selling short options. And one of the biggest reasons for this is the fact that time decay is squarely on our side as options sellers. So how does time decay in options work? Well, options are known to be the epitome of wasting assets. This means that much of the premium value of an options contract lies in the time it has until the contract expires, or the expiration date. And as that date draws closer in time, the value progressively diminishes. By the expiration date of the contract, time value has sunk to zero, and the only value left is the intrinsic value, if any. Intrinsic value, by the way, is the measure of value in the options premium that results if and when the options contract is in the money, or ITM. Time decay, on the other hand, is called extrinsic value. Now, time decay often accelerates the closer the contract gets to the expiration date, and is most pronounced for options contracts that are at the money, or ATM. This accompanying graph shows the general slope of options premium decay due to theta when at the money, in the money, and out of the money options contracts approach expiration. So why is this time decay generally so good for options sellers and so bad for options buyers? A quick and very simplified example should help illustrate. Okay, for this example, let's say it's January and XYZ stock is trading at $100 per share. Options trader A thinks XYZ will go much higher within a month's time, and therefore buys February call options at the $105 strike price for a premium of $2 per share. 100 shares of XYZ stock equals one call option contract. Now, since the contract is currently out of the money, or OTM, that $2 premium is entirely made up of time value, or extrinsic value, since there is zero intrinsic value. Options trader B, on the other hand, is the seller of the call contract and earns that $2 premium from the call buyer. Now let's say that February expiration has arrived. Options trader A was wrong, and the XYZ underlying stock continues to trade around $100. Since the call contract is still OTM, or out of the money, there's still zero intrinsic value in the options premium. But now the time value, or the extrinsic value of the contract, has progressively decayed to zero as well. Options trader A loses the $2 premium used to buy the calls, as they are now worthless with no time value or extrinsic value, and options trader B keeps the entire $2 premium as earned income for selling the calls. Of course, this is an extremely simplified example, and premium value can and will change dramatically based upon factors other than time decay, most notably changes in the price of the underlying and implied volatility. But when all other factors are kept constant, time decay is an exceptionally powerful aspect of options trading that provides a very real edge for options sellers over buyers. So there you have it, just a very quick and simple video on options time decay. Hope you found it useful. We'll have plenty more instructional videos on trading options going forward. And from all of us at OptionsPath, thank you so much and have a great day.